Joining me now is Ulrike Hoffmann-Burchardi. She is Chief Investment Officer Americas and Global Head of Equities at UBS Global Wealth Management. Thank you so much for joining us. I mean, there's so much to talk about in the markets, but because we have yet another deal in the OpenAI space, this time with AWS Amazon, I'd love to talk about how that sort of underpins the idea of technology powering the economy. Do you think that this can continue at this rate?
Well, I think it's a great observation. I think, first of all, I think the market and also tech overall, that AI trade that has underpinned the incredible run in the S&P is now more and more tethered to the success of OpenAI. It has committed $1.4 trillion in AI infrastructure spend over the next years, and all those expenses need to be balanced with income. So I think the key question now for the market will be how and how quickly will OpenAI monetize to be able to pay for those infrastructure expenses.
And so if you're looking to be a beneficiary of some of this, OpenAI obviously is not yet a publicly traded stock. You cannot buy shares of that. It seems like they're investing in many, many other players that are hyperscalers or you name it, really anyone that touches the AI trade. Do you have advice for investors?
Well, look, OpenAI has already amassed one of the key and critical resources to win this game, which is consumer attention. It has amassed 800 million weekly average users, and that can obviously be monetized relatively easily through subscriptions, through API usage, and so forth. So I think that is the key metric to watch, and likely that monetization will come at the expense of some other consumer digital platforms, because that money, that spend has to come from somewhere. It's not all going to be incremental spend.
But you don't think this is any kind of a bubble like we've seen before? There's so much discussion about, is this an AI bubble? Is it going to burst? What are the risks, knowing how interconnected all these players are starting to be, this circular idea?
Yeah, so whether it's a bubble or whether we're in a high valuation environment, I think is largely definitional. When valuations are high, I think one thing is key, and that is tighter risk management. You have to be much more focused on the fundamentals. Because markets don't correct just because of high valuations. They're correct because fundamentals disappoint. And again, I think we are on the verge of now changing from the first phase of AI, where it was all about everybody is going to win and the promise of AI, more towards this second stage of AI, where we're going to ask, what is the proof that works and who can actually win?
Sure, exactly. That's sort of the show me story, right? We really need to see that. I'd love to get your take on what's going on with the government shutdown and how that may be influencing maybe less markets, but maybe more the economy, or more what the Federal Reserve is able to see and what they're not. As Jerome Powell described it, like driving through a fog. You have to slow down. We're now almost at the longest shutdown we've ever seen. This week we'll hit that if we still stay here. How impactful is that to the markets and the economy?
Yeah, the Congressional Budget Office has estimated it costs us, in terms of unrecoverable economic losses, $250 million a day. So the pressure is mounting. And our hope is, now that President Trump is back from Asia, that his focus returns to domestic policy and that we may, in fact, get a resolution, maybe as early as this week, but hopefully before Thanksgiving.
So many pressure points there, of course. And Emily Wilkins was talking about how open enrollment has begun, how many Americans are going to see those premiums go higher. Healthcare is an area that you're actually interested in. Can you explain what you like about healthcare?
Yeah, first of all, it's actually been one of the sectors that has done best this earnings season, at least from a beat ratio perspective. 9 out of 10 healthcare companies in the U.S. beat expectations. And especially pharma and the areas of next-gen immunology, in obesity, and also in oncology, all those companies have beaten expectations. And again, we have seen that some of the policy headwinds that have been with us were at least partially addressed in the Pfizer deal, the most favored nation pricing, and also the tariffs. So we think that now is a much better setup. And ultimately, we think that also healthcare is going to be one of the biggest beneficiaries from AI. If you think that the costs of bringing a drug to market have increased so enormously over the last decades, more than 10x over the last 10 or so years. So if AI can help reduce the cost of bringing a drug to market, from discovery all the way to clinical trials, I think that may bring, again, more fantasy back into what could operating margins look like.